Hi everyone, welcome to another honeystocks.com analysis, and this is going to be going out on the 15th of May 2021. Now, before I switch over to my screen share and of course walk you through a lot of the charts, I know, especially from the emails, messages that I'm receiving on social media, etc., that there's a lot of challenges out there at the moment. And I think the big question mark at the moment is tech about to rebound. So I have a lot of charts that will hopefully demonstrate what my views are on technology versus the energy, industrials, value names, the boring names that have done nothing for 20 years. And this is a new one for me as well. I think most of us are probably in the same boat, having to shift our strategy a little bit. So try to give as much insight as I possibly can. And of course, I have around 20 individual charts, individual stocks that I think are ready to possibly move on a technical level. A couple of things to just impart right off the bat. I am not a day trader. My time horizon is weeks to months. Because I understand that the bulk of capital gains is not made in little 20 cent or 50 cent moves. It's made from $20, $50, $200 moves. So I'm primarily a trend follower, and hopefully that's shown with the charts that I'm about to present. I'm told that my analysis is exceptionally clean, well presented. So again, I hope you get something from it. But if you do like it, like I said at the start, please do like, subscribe, share on social media, etc. All helps to get the word out, and it'd be much appreciated. So let's dive into the charts. Let's see what the market's telling us, and yeah, have a good week. Now, before we get into this, please do pause the video, make sure you're comfortable with that before proceeding. Basically just says that there's not any investment advice and to do your own due diligence. Those of you that follow the channel will already know that I'm working towards my CMT. It's a big deal, and technical analysis is something that I'm widely known for. And if you do get some value from this, please do subscribe to our channel. It all helps with the YouTube algorithm. Give it a like, share it if you're on social media. I very much appreciate it. Now, I think where I want to kind of start is just spending 5 minutes going over the broader market, what I'm seeing, and then of course I've got 20 individual stocks that I think you should add to your radar for the forthcoming 7 to 14 days. Now, the market has been very, very tricky. I don't want to give the impression that I found this a walk in the park. It's been incredibly challenging, especially if you are growth minded, tech minded, etc. So what I'm going to do is just kind of work through the charts and show you what is leading the market and what I would anticipate to happen based upon the charts. Now, the S&P 500 obviously had a massive pullback from its all-time highs, found support in the 50-day simple moving average. For me, there's nothing out of the ordinary with this. Of course, some individual names have been hit very, very badly, but it is a support level. I am still bullish on the S&P 500. Given the high correlation between the S&P and the Dow, again, I'm bullish on the Dow at the moment. When we've got a rising 50-day simple moving average, we have to anticipate pullbacks. The market doesn't obviously go up like a rocket ship and continue going up for months at a time. We do have to deal with these pullbacks. Nothing is out of the ordinary. Now, that leads me on to technology. Now, as someone who has literally been through every technology chart this evening, it is very, very difficult if you are tech orientated. Some of these names have been beaten to death, and I think the big question that everybody has is, well, is technology going to recover? Are we going to see some of these brutal beatdowns start to slowly work their way back? I think they will. I think they have to. I think it's technology. Technology is not going anywhere. But what I like to do is kind of just look at the technicals, and if it can get above the 50-day simple moving average here on Monday, Tuesday, great. I own technology. I've got Apple, Microsoft, the names that you would expect. And I am actively looking for beaten down names that kind of meet my technical requirements. But what I want to draw your attention to is this ratio chart. Now, this is comparing the Dow versus technology, and why this is important is if you think about outperformance in the market, we can see that the Dow Jones relative to technology has been in a massive downtrend. So what this chart is basically saying is technology has been leading the Dow for the last 20 years. However, back in the year 2000, we can see the Dow ripped higher compared to technology. Now, for me, this isn't a coincidence that we have started to see the Dow start to outperform at this level here. That this is not a coincidence. This is technical analysis. I know there's many of you that are watching that will be, what the hell? How is this happening? This is very, very logical to me. I see the world in ones and zeros, and that this helps me identify where the outperformance is. And this is where the bulk of my work has been focused on for the last 6 weeks. Now, we can use the same chart with financials, compare it to technology. Now, what the chart is basically saying is above this level, and this level goes back again to the year 2000, when we had these value names and the names that nobody wanted to own for the last 20 years, they are now starting to break out above the levels from the year 2000. So this tells me that it's the names that nobody has really wanted to own, the industrials, the materials, the financials, the energy. These are the stocks that are in uptrends at the moment. These are showing the relative performance, and relative performance is very, very important because if you think about who's controlling the stock market, clearly it's the big money. Now, your standard money manager needs to outperform the market in order to keep their job. So they use charts like this, and I think that's something that's lost on many retail traders and investors. And I understand not everybody can afford to go and spend $3,000 a year on technical analysis software, but you can look to, I guess, utilize the software that you have to make the best decisions. And a lot of them nowadays do actually give you the facility to build these ratio charts to help you compare what is going on and where the outperformance is, because I think that's probably where many retail traders struggle quite a lot. And I think at the moment financials are looking very, very good. We've had the Russell 2000 pull back. Now, make no mistake about it, this looks like a small drop in the Russell 2000, but when you look under the hood, many of these names have completely crashed, and we're talking 60-70% drawdowns, and now they become quite appealing to me from a technical perspective. Small caps were absolutely fantastic at the tail end of last year, and of course the beginning of this year. For those of you that follow me on social media, you'll know that I posted this chart and called it to a T, and the small caps have fallen away since this level. And again, this is one of those relative performance charts where we're seeing small caps relative to the S&P 500 meeting a level of resistance, and what happens? You get a sell-off in the Russell 2000, and a lot of these names just, like I said, got beaten down. And I was using RSI for this as well within the decision making process to say that you were anticipating a pullback. So that's really how I see it at the moment. And the last ratio chart that I want to cover is value versus growth. It's a big debate at the moment. You've got many different opinions on this. Ultimately, I think they both go up together. So, excuse me. I think they both go up. But again, if you're wanting outperformance, it looks at the moment like value is likely to outperform growth based on this chart. So for me, value would be the place to be, because honestly, most of the tech names, the charts are just completely broken. and it's a complete lottery which ones are going to recover, etc. So I'm sticking to the names that I know. The relative rotation graph essentially confirms everything that I'm saying. You're seeing the leading areas of the market: XLE, oil and gas, materials, financials, industrials. So I understand that many of you that are tech oriented will be listening to this probably frustrated. Many of you will be bag holding names, etc. And I don't mean to add to any distress or anything like that. I just have to call it as I see it. And when we look under the hood at the individual names, which I'm going to get onto in a second, there are many charts out there that are incredibly appealing at the moment. And I'm going to just start off with what I think is the best setup that I've seen this week. Now, for disclosure, I already own this stock. This is a stock that I was initially in at $5. It's obviously been in a massive uptrend. I have rules in place, met resistance, exit the position here, but we have broken out. But what I like about this is it's actually broken out above the 200 period simple moving average on the weekly chart as well. I think that's a fantastic setup. We'll see what happens on Monday, Tuesday. I could have egg on my face, but of course there has to be a point where we say we're wrong, and if we start to break back below these levels, if it starts to put in a failed breakout, that's a problem. But Antero Resources, I think, ended up the day 9-10%, so let's see if there's follow through on that on Monday. FedEx, again, I think there's a fantastic upside objective here. I'm using Fibonacci. I think we were breaking out of a base. Over the course of the last week, we've had a very logical retest, and it looks like FedEx could be off and running. Microsoft, for disclosure, I own the stock. This is a chart that I actually provided our clients and members today, just saying that if we get a failed breakdown with Microsoft, which it looks like it's putting in, we can also use RSI to guide us, because RSI has been in this range for the last 18 months. When we get to the low point of the range, it seems to be a good buy opportunity. Now, hopefully, Microsoft continues to rally higher. But for those of you that like swing trading, that might be one that catches the eye a little bit. Morgan Stanley, what can I say? So massive base here. This base dates back to the 15th of September 2000, where we had a high of 91.31. Now, if Morgan Stanley breaks out above this level, it needs to be added to everybody's watch list, everybody's radar. Yes, I understand the financials, energy, they've been boring for the last 20 years, but these names are moving 5, 6, 10% in a day. They are acting like growth stocks, and I think Morgan Stanley, if it breaks out above this level from the year 2000, it's a buy all day long. Of course, if it breaks below, that's a problem. You'd probably want to reconsider the position, but Morgan Stanley looks fantastic. NCR, I like this above $50. For disclosure, this is a stock that was recommended to our clients when it broke out here above $40. It met our upside objective. I think it was like 24-25%, but I think it is gearing up for potentially another breakout, and that breakout would take it above the March 2017 highs. And again, that's not bearish for the stock. Now, I want to just touch on the mobile payments. Now, going back to what I was saying at the start about technology being beaten down, I like to use ETFs to kind of help me with identification of areas that are potentially finding support. And I'm going to show you how I use ETFs and identify individual names. Now, this is the iPay ETF. We can see it put in a failed breakout like absolutely everything recently. Pulled back, logical support level. When you go and look at the top holdings of these ETFs, you can then drill it down to see what individual stocks start to look appealing and which stocks have the same kind of setup, because we know that when a stock or an ETF or an index is range bound, the textbooks tell us it goes from the bottom to the top. It's as simple as that. So of course we have to understand where we're wrong. Below this level would be a problem, but going through the charts today, I like the look of Square Inc. I think there's a decent support level in place here. We've broken back up above the 200-day simple moving average. So if we can get follow through on this and we can have a follow through day on what we've seen today, I think there's a fantastic upside objective there with Square Inc. And yeah, let's see how that one plays out. Again, boring name, Citizens Financial Group. It's broken out above its January 2018 and March 21 highs. Again, you've got to like it above $50. T-Mobile, this is actually one of the communications tech names that has held up very, very well. I've provided this chart over the last 2 weeks to our clients and members, and it's behaving, I think, quite well. Breakout from a base, pullback, retest. When we get these pullbacks, you don't want the pullback to kind of break below the breakout level. That's generally an issue. So we've had a follow through on this, and for me that has the look of a potential bullish flag formation. It looks like it's potentially broken from that. So again, if there's follow through on this, then it should be a decent spot. Reported good earnings, I believe, as well. This is the gold and silver index. Now please note this is a weekly chart. Now we had a breakout with a retest, successful retest. Now this chart, although it looks like a triangle pattern that's just been over a few months, because it's a weekly chart, this is actually a 12-month consolidation, and it has broken out in the last 2 weeks. Again, for disclosure, I've already provided this chart to our clients and members, but it does look quite good from a breakout perspective. Exxon Mobil, going back to the energy theme, I think if we can get a breakout here, I think I'm not giving too much weighting for this. I think this is just a textbook overbought pullback. I think it's gearing up for another breakout in Exxon Mobil there. Again, Chevron, looking at this as a potential cup and handle pattern. There was a double bottom, so it's the words possible there. That's old. Sorry, this was a chart that was again provided a few months ago, but yeah, I think it's gearing up for a possible cup and handle. Cryptocurrency. For those of you that obviously follow my social media, you'll know that I have recently opened a Coinbase account, and I'm getting into crypto. So this is one of the first names that jumped at me last week. I actually posted this chart to social media. It's above 148. Now, of course, it's crypto. The risks are astronomical. The volatility is frightening. I'm trying to get my head around it, but I think when you understand that you're essentially allocating capital that you're willing to lose, it's a bit of a gamble, but we can actually use technical analysis in exactly the same way, and it's broken out from a base. And again, this is a chart, posted it to social media, posted it to our clients and members, and it's off and running. So it's actually, when we compare it relative to Bitcoin, it's massively outperforming Bitcoin at the moment as well. So again, I'm using the same tools, the same structure. I'm not overcomplicating it. I'm just using the same structure with crypto now as I am with stocks and obviously the market. Calls Group, like above $65. Last time it broke out from a base, it went on a fantastic run. And I'm seeing the same setup again presenting itself. Now, Apple, I own Apple, and I just want to draw the attention to the chart. Now, There is an issue that I have with social media a little bit, where everybody's presenting a chart and confirming patterns before they're actually confirmed by price. And I'm wanting to draw your attention to this head and shoulders pattern that everybody's talking about. That's one piece of information. You also have the other information where we've got the 200 period simple moving average acting as support. We've also got a rising trend line. And although if price breaks below this level, it's clearly a problem, you can still remain bullish above this level. I'm still holding my Apple position. I have no plans to sell it. I've held it for a long time. But if it was to break below this level, I would probably have an issue, and I would probably look to just kind of protect the profits. But I think remain bullish on Apple. I see a lot of fear mongering out there with technology and Apple in particular. I think it's okay to hold provided it's above this level. United Airlines, I think this is a level to keep an eye on. If you actually look at the ETF for United Airlines, where we have JETS, it's called JETS, very similar. It's actually breaking out of a triangle pattern. So if that happens again, using the same methodology with the payment processing, you can then drill it down and go and have a look at some of the airlines. Now, there's no guarantees that it will break out, but again, the chart is quite appealing to me. United Parcel Services has had a monster move to the upside. For disclosure, again, this is a stock that was recommended to our clients and members when it broke out. And of course, it's just kept running, and I think there's a potential for a bullish flag pattern here. So if it breaks out above this level, although it has had an incredible move already, it doesn't mean it can't have another incredible move. So again, UPS is probably one of those that's not came onto anybody's radar, but again, this is where I guess, scanning the market and obviously having parameters, you can find these names. Gap, again, base, breakout, beautiful uptrend. If you're in the camp that retail is going to continue to get better as the economy starts to open up again, then again, I think Gap might fit the bill. Caterpillar, for disclosure, I own this. I also recommended it again to our clients and members. It's base breakout, textbook, obviously part of industrials, and it's just it's a name I like. I like the safe names as well as the kind of the growth names, etc. I think Caterpillar fits the bill. Now, I want to talk about Starbucks. I've had a lot of questions on this, and I think when we look at the chart, we can clearly see that there's a level here that is significant. Now, when we get these little excursions below significant trend lines like this, it doesn't mean that you need to rush for the exits, but what it does mean is you need to kind of pay closer attention to it. If you start to break back below levels, lows of the day, that could tell us that there's a potential change in trend. So what the message would be on Starbucks at the moment is this is a headache, nothing more at the moment. If it starts to break lower, I think it's all about capital preservation and profit protection. Now, of course, there's many different views on the market. Those of you that are investors holding for the long term, keep doing your thing if it's working for you. But for me, on a technical basis, it's obviously a great company. I do enjoy a Starbucks, but yeah, a little bit of a headache there with Starbucks. Expedia, despite the volatility in the market, it's holding up this 157 level very well. So I think you can continue to be bullish above 157, and the saying by now, the bigger in base, the higher in space. Looks like it's building a bit of a base. And again, as soon as the the economy opens up again, travel, etc., which, you know, I would expect, you know, sometime this summer things get a little bit more relaxed. Expedia probably stand to benefit a little bit. Yeti, I like this above $90. Again, we sent a chart out for this on this breakout, and yeah, stopped out last week. But again, above $90, what's not to like? AbbVie breaking out above $113. Zim, integrated shipping services. Again, I actually covered this one around a month ago on this breakout here, and it's just been trending beautifully. The 20 period simple moving average is acting as support. Shipping company, for those of you that maybe don't know, the shipping companies stand to benefit quite a lot because the costs of shipping have increased quite a lot. So yeah, I think Zim, integrated shipping services, I'm sure it's not on anybody's radar, but possibly is now. Silver, precious metals, that looks like a big base that's building with silver. So I think it makes a lot of sense to start to do some due diligence on silver names, or maybe you like the commodity and you want to buy in. Yeah, it looks like it's building a base and potentially gearing up for something. United States Steel, yeah, looks like a breakout and potentially a retest. Now, what I would say is this is a very volatile stock. We can see this with the nature of price, up and down, up and down, up and down. But that said, if you are above the $24 level, I think there's a really good risk to reward to be had with this. As we can see, there's an upside objective. Now, you're probably thinking, Sam, where the hell are you getting this target from? This is historic resistance that I'm using, support and resistance. So the methodology is just look left on the chart. I think it's probably the first thing anybody should be doing. Just get the weekly chart up, condense it, look left, and you'll find that this is a significant level for the stock, as was this. So again, we're looking for a move towards 38. If we're above $24, I think you're good. Crocs, beautiful uptrend. It's pulled back over the last week. Last 2 days it's found support, and we're holding the $100 level. So I actually think that this is a decent buy. I have no time whatsoever for the product, but again, I don't discriminate against a good looking chart. So again, I think as long as you're above the $95, $100 level, I think you're good with Crocs. It's in a bit of an uptrend. Yeah, so another big breakout here. Let me just condense this up. So this is dating back to July 2005. Looks like we've had a bit of a breakout. It's pulled back. Looks like it's just put in a successful retest. If I just do that. It's always funny to me when you see technical analysts do that, but it's valid. It looks like it's putting in a valid retest. That's the key message. Yeah, had a pullback, but you know what's not to like? It's above its highs from 2005. You know that's bullish. Now going to solar, I get a lot of questions on solar, especially over the last month. Some names like this have been beaten to death. I mean, you can pick any solar name. You can look at the clean energy names, the Plug Powers of the world, etc. They're all in a lot of distress, big downtrends. But this is where technical analysis comes in, because you can be flexible with a chart like this. It's pulled back, massive pullback, as we can see, 66%. It's pulled back to its highs from February 2000. So one of two things is going to happen here. You're going to have a massive rebound from this level where buyers are going to pile in, or it's going to break down and it's going to be a short. So either way, you can add this to your radar for a buy or a sell. If it breaks below, you can short it. But again, the risk to reward for buying the stock at this level is off the scale. So I'll let you do your due diligence. It's obviously in a downtrend for a reason, but one of those could be appealing. And we've got Mondelez. How do you say that? Mondelez. Yeah, again, another breakout. We've had a bit of follow through on it, and I think with a chart like that, I think it's in the consumer staples as well, which is in an uptrend. Then I think it makes a lot of sense. So that's the analysis. I hope you found some insight from it. Hopefully it's helped you in some way. If you are somebody that struggles a little bit and maybe technical analysis is something that you'd like to maybe learn or maybe just advance your knowledge, you maybe stick around for a minute or two. But again, as I said, please do subscribe to our channel. It all helps with the YouTube algorithm. But what I do at honeystocks.com, I'll just quickly run through it with you. You can jump on to our website. We provide our annual membership where you have access to our weekend analysis, very, very similar to what you've just watched. We provide it every single week to our members and clients. Our social media, I only upload generally every 4 to 6 weeks now. I'm just way too busy. We also provide a halftime analysis on a Wednesday. We provide trade ideas, investment ideas, whatever you want to call it. Also have an incredible trading community, investment community. But I think one of the things that gets a lot of really good feedback is the technical analysis program and the tutorials that I've built out. Gets very good reviews, and I also provide charting support. So feel free to jump onto our website. Very easy to sign up. Just click on join membership here, and it's all done within a few minutes. But I'll just show you some examples of my work, some of the ideas, the official ideas that I send out. I log them all on my website for complete and open transparency. I don't know anybody else that does it. I wish it was the industry default, but that's another question for another day. But recent alert that went out for DR Horton, breakout, ended up going up to I think 106. That's the alert that went out for Yeti again. I walked through that chart just a few minutes ago. MGNI was a massive winner. That's one of the growth tech names from last year. Plug Power was just off the charts last year as well. Monster base breakout, and off it went. And United States Steel again, that's been a massive one. But you can go on to our website. I log every single idea that I've ever sent out. So go and do some due diligence and see if the types of stocks that are recommended are the types of stocks that you look to buy. I'm not a day trader. I'm not one of those guys that's calling out 20 alerts a day or anything like that. I've got a quality over quantity approach, which is the way I think it should be done. And yeah, lots of really good charts, and of course the performance of those charts kind of speaks for itself at this point. But go and do your due diligence, check out the website and see if it's a good fit for you, if you are somebody that perhaps doesn't have the time to go through everything. Just to show you some of the results of our members, that's last year. I think last year you can probably rule that out as being a result for every year. But yeah, this is Vince's second year in a row actually over 100%. This is one of our members, started off with 40,000, taking it to 96, and then I got another update taking it to 160. If you're somebody that's maybe looking to get away from day trading, maybe you just want to learn technical analysis, or maybe you're just too busy to filter through thousands of stocks and you'd like to be part of a community and all the clean charting that goes with that, then go and check out our website. We have a limit on our members, so there's another 50 spots that got opened up a couple of weeks ago, so there are still membership spots left. but it's only $500 annually, and yeah, you can decide if it's a good fit for you. But if you've stuck around to the end, from the bottom of my heart, thank you very much for watching, and stay safe out there and have a good week.